Good morning, everyone. This is Mark Leibovit from Vrtutorial.com, and this is our special tutorial update for Thanksgiving weekend, posted November 28th. Little historical view here of U.S. natural gas, and also bringing us up to date. That's ticker symbol UNG. What we're looking at here is a Leibovit VR sequential indicator, which posts all VRs. We're also looking at the stochastic indicator in the middle part of your chart, which I use as a rough guide, not as a definitive guide, but something I do keep an eye on. You're also looking at the 50-day moving average, which is the blue line, and the 200-day moving average, which is the green line. As a reminder, there are two other versions of the Leibovit VR. They are, of course, the VR directional, which filters out repetitive VRs, and the VR 2-day, which simply takes 2-day trades. Looking back here in late July, negative Leibovit VR and UNG resulted in a nice little bit of decline into early August. Positive VR in early August carried us all the way into early September. We had a little congestion here. The question is, which VRs do you take and which you don't? As a general rule, when the stochastics are overbought, and are starting to turn lower, then I tend to go after the negative VRs. When we're coming out of a bottom on the stochastic, that is the shorter one crosses above the longer one, I tend to recognize the positive VRs. I don't like taking positive VRs in overbought territory generally, or taking negative VRs in oversold territory. So as you can see at the chart, we've had some pretty good reliability with the indicators, but let me show you an example here. One I would not have taken. Here's a positive VR, and we're looking at a stochastic that has turned down. This was in mid-September, and that would have given you a bad trade. You have been quickly stopped out if you took that signal. The positive VR that came in a little bit before that, around September 10th, 11th or so, we were in an uptrend in the stochastic, so I would have taken that trade. And again, these VRs, you don't know if you're going to be looking at a multi-day or couple-week decline, as we saw back here in July and August, or simply a 2-3 day advance. I take these as trading indicators. That's what this is all about. And you can take the 2-day version and just get out in a couple days, or you can use some other indicators at your disposal to try to catch a little bit more of a move. Meanwhile, just bringing us up to date here in the last couple 3 weeks, we've had some nice little calls here. We had a negative VR here in late October, and then there was a bit of a neutral period here. A positive VR came in about a week or so back, and that's pretty much carried us here into the holiday weekend. In fact, we took out the 50-day moving average as a plus. We can see there was resistance at the 200-day on two prior occasions here, back in mid-September and again in mid-October, so I would assume that could continue to be resistance. We'll see if we can go through that. At the moment, we are in overbought territory. That doesn't mean we have to go down, but I'm less inclined to take new positions here. If I was long from 5 or 6 days back, I'd be watching the position carefully. So as you can see, nice little correlation here with UNG and the sequential VRs. And certainly if you have any questions, email me, mark.vrtrader@gmail.com. Have a pleasant weekend, happy Thanksgiving weekend, and we'll speak to you soon.